our final panelist, who is Mr. Lawrence Nyazema. He's the Chief Executive Officer for one of the leading banks in Zimbabwe called CBZ. Over to you.
Thanks very much, Director of Ceremonies. Minister, Ambassador, good evening once again, ladies and gentlemen. Although I was introduced as coming from CBZ, I represent the financial services industry in the country. We were joined tonight by colleagues from FBC, EcoBank, Stanbic or Standard Bank. Our central bank is even here tonight. So thanks very much for inviting us. But why are we here? The business case for our presence is clear and straightforward. Last year as a country, we recorded the highest levels of inflows of foreign currency, 16.2 billion. When I compare that number and where we were 10 years ago, we were hardly doing 6 billion 10 years ago. So I don't think it's by chance that we have grown those exports threefold. So thanks once again to all the miners in the room. A lot of that 16 billion actually comes from mining activities, government policy, and the investment that has come into the country. There was a long list of projects that were presented by colleagues from Mutapa earlier on. I was actually smiling as they were presenting. Why? Because we are aware of those projects and we support them. We don't come, or neither do we claim to come from a very strong point as the banking sector. We hardly have $5 billion in total deposits. If you compare that with South Africa, they are like on 375 billion. But you know what? We are not going to be deterred by those statistics. We are here to stand firmly behind our miners. We are encouraged by what is happening on the policy front, because for us to do what we do, we need a stable macroeconomic environment. So thanks very much to the governor, to the Ministry of Finance. We are now starting to get clarity in terms of the de-dollarization route. And the message that has been coming from the central bank is we are going to have low levels of inflation. We are going to have foreign currency reserves, and the aim is, I think, 6 months import cover. Which is to say, if we don't receive even a single cent, we can still pay for all our imports for 6 months. And the message is, once we get to those levels, I've just given 2 of the most critical items that I follow. Once we get to those levels, we will not be worried about whether we are using ZiG or US dollars. But more importantly, they have said if you are an exporter, we will allow you to continue having foreign currency accounts. And we will allow you to continue paying your foreign bills, which may include repayment of loan facilities in foreign currency. So the question is, why are you still worried? Where does confidence in the banking sector come from outside the policy environment? So the first source of financing capacity would be bank debt. And I'm sure all evening you have heard one man being thanked over and over again. My brother Humphrey from Afrexim. I can assure you that at least $1 billion of the $5 billion I talked about has come from Afrexim. They have stood with us. They have stood with us through thick and thin. I also welcome other regional financiers, the likes of Africa Finance Corporation. I look forward to doing big things on the infrastructure side with AFC. The likes of Shelter Afrique, the likes of AFDB, TDB. If you go further out, you're looking at European Investment Bank. We have had significant support. And interestingly, at CBZ, we are currently talking to an American financier. And before the end of March, we may actually have a commercial line of credit coming from the United States, which also speaks volumes to the policy environment that we are seeing, as well as the opportunity that the Americans are seeing, be it in our minerals or whatever is obtaining in our economy. The second source would be institutional funds, from pension funds and the insurance pools. Glad to say, for those who have been following the Kavango story, they raised 80% of the 6.5 million that they wanted from 20 pension funds in Zimbabwe. So yes, it's small, it's early days, but again, they are not deterred. Another interesting one is to say, and probably one of the biggest gold investments we are looking at as a country wants to attract 30 million from pension funds, and I'm sure they are going to attract. Then my biggest source of comfort is to say the Zimbabwean banks are finally working together. We have a project, a gold project in Mashonaland Central. 4 banks went out there, they looked at the project, and in a couple of days they had committed 75 million of the 150 million that is required. There is also another project in Matebeleland for 500 million. They want to raise 150 million locally. So far, 6 banks, most of which are in this room, have committed to raising that 150 million. So it can be done. It's not at the level that we want, but we are moving in the right direction. Then finally, is our capital markets. My team was telling me earlier on that our capital markets are shallow. They need to Google what the meaning of shallow means. Because when I travel elsewhere in Africa, they've never heard of a REIT. They've never done a bond. But I remember we did a bond of 50 million. We wanted to raise 50 million 3 years ago, or is it now 4 years ago, to kickstart the Caro project. We managed to raise 37.5. And when it matured last year, that bond was fully settled and renewed. So those are the 3 main ways in which capital is going to be raised, which is bank debt, with support from our regional and international partners, our institutional funds, which is the pension funds, and then the capital markets. Yes, we still need to deepen them, but we are moving in the right direction. So I look forward to us commissioning and launching a lot of the projects that were being talked about today. Shamva, for me, is a no-brainer. It should have been done years ago. It's now finally being done. Whether we are talking about Kama TV, whether it's Caro, for us as the financial services sector, in conclusion, ours is to wish you well, and ours is to give you support. Thank you very much.